Hello, this is Jordan. This video is being recorded on the afternoon of Friday, May 3rd, 2024. Thank you so much for tuning in. In this video, going to recap the week for gold and silver and the miners. First things first, if you haven't already, please subscribe. I'd really appreciate it. Got a lot more great content coming for you over the weeks ahead. Thank you. Now, let's get right into the video. So the story this week is the correction continues. And it's really a bullish correction, or at this point, it's nothing to be worried about if you are a bull. So we have the daily candle charts here, gold at the top, silver below, and then we have the gold-silver ratio. Of course, this trend line, it even goes back farther than this chart shows, but this gold-silver ratio trend line, the next move could be important for the sector, the next big move higher, I should say, when this correction ends, because then there's the risk, at least the risk for gold divided by silver, that you could see this ratio fall below the trend line, and then silver strongly outperforms gold. But we're not quite there yet. So looking at the daily candles, gold was down, I believe, about 1.5% this week, maybe 1.6% this week. And we did, on Thursday, we did get a bit of a rally, but then gold failed to hold that. Today, basically flat, but not the greatest candle. Gold was up. Those gains were sold. But anyway, the lows here are just under 2,300. And I've been saying this for the last couple weeks, 50-day moving average. And then you have the bottom of this open gap here right at 2,240. Now the 50-day is at 2,239 if we round that up. So look for gold to test the 50-day moving average, be it down here at 2,240 or maybe it'll come in a little bit higher. But either way, gold's going to test the 50-day moving average. And again, when the market is really running, gold I'm speaking about, when it's really running historically, the 50-day moving average is where it bottoms in corrections. Now, when that doesn't happen and it's still running, the market can also bottom at the 100-day, which is right here, or the 150-day. So the 100-day, this is slowly rising. Maybe in June, this could get up into the 2200s potentially. So I'm not sure that we're going to see this, where this correction goes like that and then gold's going to go back. It might, bounce here and might, bounce around for a little while. You could see something like that. So still in correction mode, but not that much more downside in terms of price. That's my view for gold here and now. Silver, better candle today than gold. You can see this is a bullish hammer. It opened here in the upper 26s, but intraday it tested all the way down here, right at about 26.25. Remember, I've been mentioning 26.25, 26.30. That's the support level because that's the bottom of this gap when silver broke above 26. You also have support here right at 26, the open gap, and the 50-day, of course, is coming up. So we cannot rule that out completely, that at some point silver could rally, then come back, retest 26. Maybe it fills the gap here at some point. But nevertheless, this is still bullish action. You like to see the bounce off support and then the strong reversal. So that's a nice bullish hammer. And maybe we'll have to see. Maybe this is the end of the price correction. But if not, it's not going to go that much lower because it would come down here and fill the gap. And that's really not that much lower than the low here. So that's where we are. On the daily chart, let's get into the weekly chart, discuss it here for a moment or so, and we can see here it's pretty clear. We're in correction mode. You got 2 down weeks in gold, 2 down weeks in silver. Here's the support here at 26. This is not quite a bullish hammer on the weekly. It is on the daily, not quite on the weekly. So who knows? Maybe silver, if the rebound today, if that fails in the next couple days, maybe silver could come down and fill that open gap down to 26, and then maybe you would see a bullish hammer on the weekly. So that's a possibility. Here you can see the open gap here. So it's pretty much self-explanatory, I should say, if you know a little bit about technical analysis. Market got too overbought. Now it's correcting, and look for it to correct a little bit more and then probably stabilize. That's my view at this point. Okay, moving into the miners. First, let me speak about the advanced decline line. So this is GDX. These are line charts, which they only look at daily closes, so we're not looking at intraday action. This is also a daily closing chart for the advanced decline line. So the advanced decline line is like the holy grail of leading indicators when you're looking at a market or a sector of stocks. And so the advanced decline line is essentially measuring how many of the stocks in that group that you're looking at are rising versus falling. And the reason why the advanced decline line is important is because typically a trend is at its strongest when that particular index group or basket, when nearly everything in that group is rising. And it's true for the other side in a bear trend, where the bear trend is the strongest when everything in that group is falling. So when a rally gets moving, the advanced decline line is a good confirmation indicator, but it's a breadth indicator, and it tends to be a good leading indicator because you tend to see before the price action or price trend changes its trend, before it goes from a decline to a rebound, and it's rising, and then it peaks and it's falling. And so before you see those changes, you tend to see changes in the advanced decline line. So let me give an example, just showing you the recent action. So GDX is in correction mode. We've seen that. I mean, it hasn't been that much of a correction so far according to this price chart, but we can see, the price has come back here a little bit since the correction started. But the advanced decline line has not moved down during this price weakness. It peaked here, and so it's right here. So the advanced decline line has not moved down that much. Now let's compare to the past. If we look at this, which was kind of a double top, we can see when the GDX made the double top here in the spring of 2023. Look how much weaker the advanced decline line was. It was that much weaker, and at this point here, the advanced decline line had already weakened significantly. Same thing here, where you had a higher high in GDX here, but you had a higher low in the advanced decline line. And you can see here just how much the advanced decline line deteriorated. And so it kind of led this move down. So typically when we're looking at the advanced decline line, that's what happens. It's a leading indicator. It's not always going to be perfect. It doesn't have a 100% track record. But the point is, where we are here and now is, yes, we're in this little correction. It hasn't really been that significant, but we've seen no deterioration in the advanced decline line yet. So that's a good sign that there really isn't, that much power behind this correction, and that this tells us that some stocks are declining, but we're not seeing most stocks in the GDX, really decline that much. So that's a good signal. And finally, we'll take a look at the price action in the miners. Okay, so looking at the price action in the miners, I mean, generally this remains bullish, where, again, you had this was resistance. The miners broke above, and now they've come back and done a couple retests, and there's not enough strength here for the market to break above resistance yet. So it can just continue to consolidate. It could come down here and back and fill for a little while. The 50-day moving averages, I mean, here's GDXJ. You can see here's SILJ. Just a couple weeks ago, I mean, just look how far the market was above the 50-day moving averages. It was quite extended. So maybe we need to see the 50-day moving averages come up to these blue lines, and that implies more consolidation here in the miners. And maybe they need to test the 50-day at some point in the next month or so. They test it, and then they rally, and then after that, at some point, they'll be ready to break above these red lines. So for the miners, we're still on a backing and filling point where it doesn't look to me like they're going to threaten to break below support, or at least break out in the next week or so. But stepping back, for all of these, this is a bullish consolidation. I mean, this is bullish action. We just have to be a little patient, let the miners find an equilibrium over the weeks ahead, and then they'll be in position to probably make that next move higher. That's all for this video. Thanks so much for tuning in. Hope you all had a great week. Hope you all have a great weekend ahead, and let me know in the comments what you think. I'll talk to you guys again in the next video. Thank you.